executing, implementing. And this implies that as leaders, we have a lot to do. Now, my submission is divided into 5 parts. The first part, I'm trying to piggybacking on the theme of our retreat and try to touch a bit about the concept of innovation, try to remind each other some of the important things that we need to take into consideration. And then I will touch a bit about why we believe that innovation is important in Africa insurance and the pension sector and subsectors. And then I'll touch a bit about digital transformation, then go into the digitizing the insurance value chain, and this will also mean the social insurance. And finally, I'll conclude with a call to action. Now, Steve Jobs says, innovation is the ability to see change as an opportunity and not a threat. So to speak, to see our problems as opportunities. The concept of innovation has been surrounded with a set of myths, including believing that innovation is all about technology, which is not true. It's about serving the customer better. Maybe innovation is about good idea, which is not true. Innovation is about, yes, ideas, but processes, the culture, the actions, and the execution of the ideas. Some myths will go on to say innovation emanates from, geniuses, but it is a result of collective intelligence and thinking process. Some would say innovation is about originality of the idea, discovering new things, but it's so much about finding solutions which work better to solve the problems that exist. And some would say innovation is about being the first one to the market with the idea, with the solution. But the fast followers can also innovate, and at times they may surpass the first mover. So Theodore Levitt is telling us that while creativity is about thinking up new things, innovation is more about doing the new things. Next slide, please. Now, it's important that we strengthen the innovation ecosystems within our organizations. And that will mean we must spread the effort, the level of effort across all the core components of an inclusive insurance and pension innovation ecosystem, including, yes, the technology, but more important, the knowledge base, the strategy, the capacity systems, and ensuring that these interventions are sustainable, that the fundings, the resources that are put in place, they ensure scalability and sustainability of this solution, also bringing into the dynamics, the public and the private partnerships and also leveraging on the existing infrastructure. Next slide, please. We must also align the innovation efforts across all the facets of innovation. At times, we forget ourselves and focus only on technological aspects of it. This is why maybe we are focusing on talking about maybe digitization. Yes, technology is important, but product innovation is important. Marketing innovation is important. We need to find a different way, new ways of educating our people about the solutions that we have, ensuring that our customer of today is satisfied with customer-centric solutions, which are developed from a human-centered design. Processes of our businesses, they also must receive adequate level of effort in interventions so that we can eventually now, in combination of all these facets and these dimensions, get to see improved revenues, improved population coverage, and contribution to our economies across the continent. So why is this dialogue important for our continent today, why innovation is important for us as Africans today. The one argument for the necessity and urgency of thinking about innovation in all its facets today is the Africa Continental Free Trade Area and the potential that Africa holds today. The economists are informing us that the GDP of Africa will grow at a rate of 6% in the next 50 years to an economy size of 66.4 trillion come year 2072. This will only be possible if we optimize the opportunity that is brought by the Africa Continental Free Trade Area. If we don't, the same economists are telling us that this GDP will get to at least a 50 trillion. So there will be a gap of 16 trillion in the size of the economy of the continent in the next 50 years if we do not optimize, we do not think differently today. Now, today our economy of the GDP of the continent is about 3.4 trillion US dollars. Now think the difference of 16 trillion US dollars. If we don't do things differently today, this is the opportunity that will be lost for the next generation and for those of us who will be around come 2072. But number two, the Africa Continental Free Trade Area bring an opportunity to lift out of poverty about 30 million people in our continent come 2035. Now, 30 million people is 50% of the population of the country that I come from, Tanzania. And I am informed it's about twice the population of the country that I'm standing on, Zimbabwe. So if we can live out of poverty at least 50% of a country, or twice the size of a country, in a span of less than 10 years, if we optimize, then there is all the justification why we must think different, act different, so that we can tap into this opportunity. But again, the Africa Continental Free Trade Area brings with it a consumer spending of about 6.7 trillion US dollars come 2030, but also an opportunity for businesses to grow by 30%, actually 33%. Now, think what will be the size of the pension sector or the insurance subsector if it grow by 33% in a span of the 7 years that are remaining. Finally, for the pensions and the insurance sector, the Africa Continental Free Trade Area brings an opportunity for the assets of the pensions to grow by a 0.7%. Some may think this is not a very significant number, but if you follow the growth trends of the pension sector in the continent, you realize this is a significant progress. But again, the premiums collected by the insurance industry are expected to grow just come 2025. Some are estimating to 115 billion US dollars, some are estimating 130 billion US dollars. But if we optimize the opportunities which are brought by the Africa Continental Free Trade Area. So all this opportunity can be tapped if we find different ways across all the facets of innovation, products, processes, marketing, and technology, and optimize for the benefit of our people. The other justification is the wealth that this continent possesses. The president of AIO, while presenting his remarks in the opening, he mentioned about Africa being the bullseye of the world. Everyone wants to have a piece of this continent. The Asians, the Chinese, the Americans, everyone wants a piece of this continent. Why? It's because the continent is so rich. The biggest wealth of this continent is its population, which will continue to grow significantly. It is estimated that by 2030, we will have a population of 1.7 billion, and come 2050, we'll have 2.5 billion people. Now, this is a market for all the types of insurance and social insurance products that we think of. This population, if now we are also optimizing the opportunity which is brought by the Africa Continental Free Trade Area, definitely they will have the purchasing power to buy the solutions that we are offering. But again, think of the arable land that we have. The science is telling us that Africa holds 65% of the global arable land. So Africa is positioned to provide, I would say, at least 65% of food for the world. This can all be possible if we can bring solutions which are needed by our farmers. But as we are standing today, agriculture insurance contributes only 1% of the gross written premium in the continent, while it contributes about 30% of our economies. Therefore, we have to think differently. We need to find new ways to bring these solutions. Think of the minerals that this continent has. Think of oil and gas, which is being discovered in various countries. Do we have the underwriting capacity, technical and financial, to provide insurance solutions for these discoveries? Or we'll continue to see significant portion of premiums externalized to other parts of the world? Therefore, we must think differently and thus we must innovate. About the insurance market and the opportunity of the Africa Continental Free Trade Area. Now, we did a study and tried to estimate in the span of 50 years, what would be like the premium volumes, the insurance premium volumes? Now, our estimate came to a conclusion that if the insurance industry will continue to grow at 7% per annum that we are currently growing at in the next 50 years, we will see the premiums grow from 115 billion to a 3.4 trillion US dollars in a span of 50 years. That is close to the GDP of the continent today. But if we don't optimize on the Africa Continental Free Trade Area, there will be a gap of about 1 trillion US dollars in terms of the opportunity lost, right, which is the significant cost if we don't do anything different. The final key consideration of why we must think and act differently is the aspirations that we have as a continent. In terms of insurance, our aspiration in the CAM 2025 2030, we want to move from a 2.8 GDP contribution to a 5% GDP contribution. In the pension space, we want to move from the 17% of the population which is covered by at least one type of social protection product today to a 40% of the population. To get to this number, we must do things differently, and therefore we must innovate. Now, allow me to turn into digital transformation and what it all means to our businesses. Digital transformation is the final process or the final step of digitization of our process where we convert our analog to digital, from manual files to digitized files. Then get into digitalization where we adopt the processes and the systems, when we automate most of the things. And finally, now the whole business is converted to be a digital business and process, and therefore calling it a digital transformation. Josh Bezin is saying that digital transformation is not about technology at all. It is about the people. What does this mean? If we look at the dimensions of digital transformation, you will see of the 6 dimensions, only 1 dimension is about technology, and the remaining 5, they are all about the people. If you think of the strategy, you think of the technical competence of the human resource, if you think of the organization ability and structure, you think of culture, you think of the customer, all these are about people, and only one component is about technology. In digitizing the insurance value chain, where today we are witnessing a rapid change that is advanced by the technology. One, we are seeing new modes of consumption, the type of the customers that are coming into the market, the Generation Z, who are usually referred to, the gig economy, which bring new industry structures, the emergence of new risks, the cyber risk, think of the e-commerce, people procuring from various parts of the continent, not receiving what they bought, hacking into accounts of institutions, of individuals, and the likes. Autonomous and mobility and transportations, the cars, the trucks, the planes, the drones, manufacturing with new materials. Recently, the Israelites introduced a 3D printing for meat, all type of meat, chicken, fish, and beef. So we are getting to a point where now we will have a printed T-bone, right? Uh, and with its associated risk, there are new dimensions of risk that are brought into the marketplace. But again, the technology companies which bring issues of trust and new risk to society and the economy, especially as in Africa, where we rely so much of our software from outside. Now, this is a significant risk for the continent that we must think immediately on how we are trying, we should build the capacity within the continent. Geopolitical issues, issues of artificial intelligence, privacy, intellectual property rights, and all this has impact or brings impact on the value chain of our businesses. So the insurance value chain is being re-engineered by the advent of digital technology. We are witnessing in product design and development the use-based insurance where the driver will pay the premium as per the number of time he drives and the likes. On pricing and underwriting, we are witnessing big data and analytics creating opportunity for new claims driver and underwriting requirements, rating requirements. In the marketing, we are witnessing the advent of robo-advisors, educating the clients and pushing the boundaries for literacy and awareness and procuring or purchasing insurance. In distribution, we are witnessing an omni-channel interaction with the market using mobile phones, the websites, and other points of intervention. But also in the policy administration and claims management. But of the utmost significance is the component of insurance value chain which do not receive enough weight in digitization, and that is the reinsurance component and asset management. There are few institutions or companies that are putting effort and trying to re-engineer the reinsurance business and digitize it and the asset management. What value does, what impact does this digitalization brings to the value chain of insurance? Now, the study by Baines and Company tells us that the claims management is the area of insurance value chain that has the highest potential for a significant impact when digitized. The Baines study says that the automation of the claims management can reduce the cost by about 30% if we digitize the claims management processes. But again, other studies are telling us that for our continent, claims management is the priority area that needs re-engineering, that needs to be changed to see the growth and progress that we need. We did an exercise on empathy in the trainings in the past 2 days that we had. And it was interesting to note 71% of the participants are concerned about claims-related issues. This is how important the value chain approach of digitization is important. The second area of value, when we think of digitizing the insurance value chain, is distribution and marketing, followed by underwriting. Now, the interesting insight is the fact that distribution is where most of the efforts on digitizing insurance have been exerted. And therefore, we are not reaping the impact or the value that we would or we were supposed to reap from digitizing the insurance value chain, followed by pricing. So there are a number of case studies of digital solutions in the insurance space that we need to observe and ask ourselves question of what can we do to change the landscape of the insurance in the continent today. One of such cases is a solution by the Arma Insurance, a Canadian insurer, that provides education about cybersecurity. For me, the most interesting component of their solution is the fact that it is not a very complicated solution. It is just a short questionnaire that is sent to business owner to assess their needs for cyber insurance. Now, for those who are in the business, they would know cyber insurance is among the most complicated business process to underwrite. It takes a lot of time. Usually, most of the local markets do not even have the local capacity to retain anything. It's usually fronted. But with this kind of innovation, we can even start to understand the needs of the small and medium-sized enterprises, but also the corporates, and try to bring solutions. But the other aspect is the importance of digitization in providing education. One of the key problems in the insurance space in the continent is literacy. Right? So people are not so much aware about insurance. How are we using digital solutions to educate our people? The second case that is of interest to share with you today is from a French company called Shift Technology, which has developed an AI technology solution to process claims in minutes. And this solution, when they were testing it with more than 1 million documents, it had accuracy of 97%. 97% accuracy. So the opportunity for reducing errors, enabling insurers to process claims, in minutes rather than in weeks, and reducing the cost of claim processes, cannot be overemphasized by this kind of solutions that are brought to our market. Now, coming to the close of my submission this morning, I want to pose a call to action to all of us in this meeting, being from the business, being from the policy making, being the regulators who overseeing the business. We should observe that the giant institutions are take steps to tap into the opportunity, the opportunity that is brought by the digital infrastructure that exists. The likes of Amazon, who has taken initiative to start to sell motor insurance and home insurance. The studies are indicating that about 18% of the people are willing to purchase insurance from the Amazon platforms. Now, looking at where we are going, so today people are buying, various items from Amazon from all the parts of the world. What will be the scenario when now Amazon start to sell insurance in our continent, when we, the players on the ground, have failed to take that opportunity? In India, Amazon has started to sell life, health, and general insurance policies. And it is indicated that Walmart, Alibaba, and Berkshire are taking similar steps. So the giants have already started to garner their efforts and their resources to tap into this opportunity. There are challenges that must be considered and be addressed as we are embarking on the journey to digitize the insurance industry. For the insurers, there is a need to consider the digital partners that are not so easy to work with. Their way of operating is quite different from the insurance industry, which is somewhat traditionalist. But again, the pressure to bring the solutions to the market, and the efficiency, the return on investment, the ability in-house of the insurance companies to address the digital needs, and the conflict of channels. You have your brokers, your agents, and now you are bringing the digital solution that may significantly disintermediate the insurance business. Then for the regulators, um, considerations between life or general insurance, where should we put the effort, where should we put the incentives and motivations, what are the dynamics on consumer protection, the differentiation of the products, and the issues of data privacy. Now, thinking as Africans today is not something that we are starting today. Looking back in 1963, when our forefathers were establishing the Africa Union, Haile Selassie, the Emperor of Ethiopia, made a very interesting observation, which is true to date, that Africa today is at mid-course in transition from Africa of yesterday to the Africa of tomorrow. Even as we stand here, we move from the past into the future. The task on which we have embarked, the making of Africa, will not wait. We must act to shape and mold the future and leave our imprint on the events as they slip past into history. So we are here today, 60 years later, and we have the Agenda 2063 of the Africa we want. To live into this Agenda 2063 and in the perspectives of digitization of the insurance, social and conventional value chains, as leaders, there are considerations for transforming the way we think. The way we think about the sensors and the information that we are gathering, and how this is transformed by the Internet of Things, the data that we have been gathering with the advent of the big data and structured data that is rampantly available, that can be used to propel us forward. The information that we have and how machine learning, deep learning can use to bring new solutions. The decision making and how artificial intelligence can support, enable, and fasten and improve the accuracy of the decisions that you are making. And finally, in terms of acting, how can we automate the actions that are supposed to happen? For the ecosystems, we need to consider holistically our interventions to bring about a digitized or digitalized value chains. It is not only about addressing the technology needs, the reg tech, the sub tech, the insure tech. We need to consider all our needs as the continent, including issues like expanding the scope of mandatory insurance, coordinating our efforts, initiatives in the market. There are some markets where you find, when it comes to universal health insurance, you have different initiatives by different players. You go to agriculture insurance, there are different initiatives by different players. As a result, the progress becomes significantly slow as our efforts are disjointed and scattered. The issues of incentives. How can we incentivize those who are supporting, are enabling, are showing commitment to take the continent to the aspirations we have, or to take our countries to the aspirations we have. As the countries, we have our own targets on where we want to be on insurance coverage of our people, on pensions coverage of our people. How do we incentivize? How do we create pacemakers to make sure these targets that we are putting, the numbers that we are saying we want insurance to contribute, 5%, 7%, 10% of our economy, how are we incentivizing those who are making extra efforts to get to these numbers? How are we building capacity? Bringing more experts in the market. I've been mentioning about our needs for specialized capacities in the emerging areas, the cyber risk, the oil and gas space, the aviation space, and many others, agriculture, insurance, and the likes. How do we build more skills, more competences, so that we can be able to tap into these opportunities? How do we create public-private partnership to bring into the sector the capacity that is needed, the pools that we are creating, the consortiums, our capital markets through insurance-linked securities, the card bonds, the industrial loss warranties, and the likes? How can we work together, the private sector and the public sector, to strengthen the capacities of the insurance market to retain more business in our continent and bring more impact to our economy? The role of research and development to innovate, to bring new markets such as Islamic insurance, microinsurance, micro pensions, and the like. And how are we working together to enhance the image of the insurance and pension sectors to our people, the trust, by one, improving the claims management and claims settlement and turnaround times. In total, how are we creating an enabling environment that can take us to the opportunity of the great Africa that we know exists? For the regulators, as we are digitizing, I just have one call to you. How can we bring about machine-readable regulation? To make rules machine-executable, we first must make them machine-readable. Now, because the machines read different way from the way humans do, it means we must use less ambiguous language, more simplified, more clearer, and therefore a call to digitize the rule book. With that, I conclude by saying that the opportunities which is brought about by the Africa Continental Free Trade Area can lead to a more resilient and a more prosperous Africa. So it is up to the governments, the regulatory bodies, and the industry players to collaborate so that we can ensure that the benefits of this Africa Continental Free Trade Area translate into tangible improvements in the lives of our people. I say thank you very much. There is a way to do it better. Let's find it. Since the MC has stepped out, if there is any question, please. Questions, comments. The slides, please. Can you bring back the slides? And then I'll try to find. Ah.
Right, so I did see the standards for custom for student and then we'll get over to that's one way. always look at the settings of the customer.
Any other question? I can take maybe two, three, and then I can respond if there is any other.
Thank you for the explanation. I wanted to ask, there's one country of the AFC today. I wanted to ask how can insurance industry and the regulators automate the AFC activity?
I guess those are about all the questions. Thank you very much. So, uh, the challenges to the customer. Now, digitization presumes that you are building on a human centered design. You are starting from the customer, that all the considerations that you put forth in bringing this solution is from the customer. Right, so the needs of the customer, the need for the customer to be more convenient, and etc. etc. So the presupposition was, as we are digitizing, we are starting from the customer. And therefore, we are looking only on the supply and the regulatory side issues, because we are supposed to bring these solutions to the people. And therefore, these solutions address, if we are addressing these solutions, essentially, we are addressing the needs of the customer. That is the take of looking only on the supply side and the enabling environment side. That's the regulatory side. How can the regulators optimize the AFCFTA? Essentially, this is what this dialogue is all about. One, how can we open the markets? Because that is the essence of opening up the continent. How can we coordinate our efforts to address the problems that cannot be addressed by one country? You recall my not when I was starting about South Africa being not able to access reinsurance capacity. Now, this is a country which has 70% of the insurance business in the continent, and if it fails to access reinsurance capacity for its, now think of the small countries. What will be their situation, right? So, how are we coordinating our efforts? Tomorrow we will hear about combining the balance of the reinsurers as one idea of how we can enhance the retention capacity or provide more required reinsurance capacity in our continent. So there are many dimensions that need to be looked into. For example, we do know that the capital markets in the continent has about 2 trillion US dollars capitalization, 50%, about a 50% of the equity and debt market. But the debt market is more active. So the question would be, this potential of 1 trillion US dollars, how can we tap into it to bring it into the insurance industry as an extension of insurance capacity through such as catastrophic bonds, for example? Now, if you bring or you look at only one capital market, you may not see either significant volumes or significant level of transactions. But if you look at the continent as a whole, then we definitely would see the strength and the value of tapping into the capital market and the capacity that it brings. So there are a number of dimensions that the supply side and the regulatory side need to look at into optimizing, and these are dialogues which must happen, and this is what these forums are about. I think that brings me to the end of submission. I thank you very much for your attention, and may God bless you.
Once again, another big round of applause, ladies and gentlemen. Thank you so much for that presentation. The souvenirs, and we'll do them we agreed to do them at the gala dinner. Moving on with our program for the next presentation is on universal social protection in African Strategy 2025, covering 40% and the missing middle. Mr. Shepard Muperi, Director, Social Security, NASA. Let's give him a big round of applause as he comes through. All right. He's the Director of Social Security at the National Social Security Authority, Zimbabwe. He holds a Master of Science degree in Social Protection Financing from the University of Mauritius, Master of Business Administration from Zimbabwe Open University, Bachelor of Commerce Business Management Honors degree, majoring in Finance from the Midland State University, Zimbabwe Social Protection Transformation Certificate, offered by socialprotection.org, an initiative of UNICEF, ILO, and UNDP, and funded by Irish Aid, OECD, and Finland, Swedish International Development Agency, International Social Protection Training Certificate, and National Higher Diploma in Accounting from the Ministry of Higher and Tertiary Education in Zimbabwe. He's a member of the National Social Protection Steering Committee, Zimbabwe, since 2017 to date, and a member of the steering committee on the establishment of Universal Non-Contributory Old Age Pension Program for Zimbabwe, a member of ISSA Network of Social Security Experts since 2018. And ladies and gentlemen, when I did announce Dr. Ansalmi, my apologies, Doctor, I didn't go through your profile, but allow me to do that now, even after you have made your presentation. Dr. Ansalmi is the Director of International Relations, Research, and Consultancy at the Africa College of Insurance and Social Protection. He is the MD for Aclavia Group Co. Limited. He is the current Executive Secretary of the Association of the African Insurance Educators and Trainers. He serves in various task forces within the insurance industry and outside, geared at engineering growth of the financial sector and inclusive economy, such as National Agriculture Insurance Scheme, Tax Reforms Committee of the Insurance Industry in Tanzania, member of African Insurance Organization, Microinsurance Working Group, and the editorial committee of AIO and INSU Resilience Global Partnership, Gender and Agriculture Insurance Working Groups. He is associate of the Chartered Institute of Securities and Investments of London and Toronto. If you look through this, you can read the rest of his profile. The rest of his profile is in right here. But for now, ladies and gentlemen, please, let's give him a big round of applause. Thank you.
Thank you very much, Director of Ceremonies, Mr. Maimba, esteemed delegates, ladies and gentlemen. Allow me to ride on protocols already observed before I can mess up with the names that I was hearing here. I don't think I will be able to do justice to that. So I will speak to you on universal social protection in Africa in Strategy 2025, covering 40% and the missing middle. I'm sure if you listened to the keynote speech from the Honorable Minister, he already touched on some of the things that I'm going to talk about already. Even the doctor who has just left the podium here also touched on some of the things that we'll talk about. Universal social protection in Africa. So my presentation will go as you see there. We will try to have a common understanding of social protection today, I know that social protection is quite a broad subject and it's understood differently and defined differently by different people. But for the purpose of our discussion, we'll try and come to a common understanding of what we want to call social protection today. So we'll try to unpack social protection. We'll then also look at universal or universality, because we want everybody to be covered by social protection. We need to look at this and say, what is it that we talk about when we talk about universal social protection or universality? We'll then also look at why is it even of necessity, of concern to Africa to make sure that we provide universal social protection. And we look at our strategy 2021-2025 on universal social protection with the target to cover 40% of the population by 2030. We'll try to unpack the strategy. After we have looked at the strategy, we'll then also try to proffer some recommendations for the House as we try to come up with reforms, solutions, strategies on how we can accelerate or achieve universal social protection coverage. So, unpacking social protection. What is social protection? Like I said, this is a broad topic or subject, social protection, and it defined differently by many different people. But for today, let us say this is the definition we are trying to put across. And I know that although you may define it differently, but at the end of the day, the idea, the message is always the same. So the ILO says social protection refers to policies and programs to combat poverty and vulnerability through one's life. This is the concern. And it includes these schemes: social insurance, like somebody said here, we call social insurance, and that's social security. But we all belong to one family. It's one industry of social protection, including pensions and private insurance that we regulate. So although we are talking about social insurance here, but our social protection will include even the private insurance and pensions that we regulate. And we are also looking at non-contributory tax-financed benefits, which our governments will have to provide to the poor, those who cannot contribute for social protection or for social security for their benefits. But I like also the World Bank's philosophy on social protection. The World Bank underscores its role in livelihoods, resilience, and income risk management. So the World Bank is more into building resilience through livelihood programs so that people are able to generate income for their well-being. And some of the countries, including Africa, have constitutionally guaranteed social security for a decent standard of living for their citizens. So without going into too many definitions of social protection, I know that I'm also talking to the converted. This is a subject that you all know. That's the industry we are in. But I think for the purpose of our discussion, we may say this is how we appreciate and understand social protection. Now, we have talked about our industry, social protection. It is there to assist citizens to better manage life risks. Programs are put in place, insurance, social protection, to help our citizens to better manage life risks. These risks are provided for in the ILO Convention 102 of 1952. I can just mention them. The ILO talks of minimum standards of social security, which are maternity, sickness, unemployment, work injury, medical care, family with children, disability, death of a breadwinner, old age. I'm sure you'll agree with me that in one way or the other, these risks or contingencies will catch up with us. And you need an arrangement to be in place to be able to replace income, to be able to continue with your lifestyle in the event of these risks happening. With an appreciation of these risks, we are now saying, I think we all understand and appreciate why we should provide social protection. Now, this social protection we are talking about here is a human right. We all understand what a human right is. It is something that our citizens have to enjoy. We should assist them to realize this right. It's a human right in terms of various international instruments as well as regional coming to our continent, Africa. In terms of the Universal Declaration of Human Rights, Article 22, this social protection we are talking about today is a human right. In terms of the International Covenant on Economic, Social, and Cultural Rights, 1966, social protection is a human right. Coming into the continent, the African Union Protocol on Social Protection, which was passed not very long ago in February 2022, it provides for the right to social protection that is available, accessible, adequate, affordable, and transparent. This is the aspiration of Africa in terms of providing social protection. It has to satisfy all these features. Now, is there anything to gain in providing social protection to the nation, to our governments, to our communities, to our families, to individuals? I want to try and convince you, ladies and gentlemen, that there is everything to lose for our economies if we don't provide social protection to our citizens. There is everything to gain. Government level, national level, the economy, community, families, and individuals. And these are some of the benefits that we all need to appreciate in terms of providing social protection to our people in the continent, as it is also provided in the world. So social protection helps in the provision of needs. It ensures that as a continent, as governments, we are able to provide basic needs, which are food, shelter, healthcare, and others to our citizens, which they cannot otherwise afford on their own. Social protection, social insurance, and pensions that we all provide helps in income replacement to make sure that in the event of risks happening, the programs that we have put in place as social protection, social security, will replace income to enable our citizens to maintain their well-being. Responding to shocks. We all know the issue of shocks. We were recently hit by COVID-19. If there was no social protection, the world, our continent, would have been worse off today. But our people were able to continue with their lives because of the provision of social protection and social security. So it helps us to respond to shocks, behavioral change. Without social security, social protection, when people are not certain that they will be able to feed themselves, they don't even think about saving. We talk of a saving culture in Africa. For people to participate in our insurance and pensions and social protection, they should have that saving culture. But now, if the basics are covered by social protection, it changes their behavior. They think of investing for their children, for the future, because the other basics have been covered. Building resilience Our people need to be resilient to shocks, climate change. We have talked about COVID-19. So, social protection helps people to partake in livelihood programs to support themselves. So, we are able to build resilience amongst our citizens through the provision of social protection. Building human capital. Social protection that we provide enables families to send their children to school. It enables countries to develop human capital for tomorrow's workforce. So is the value of social protection. Without it, our economies will not move to the next level. Women empowerment. We all know that from history, women have been marginalized, and social protection is really a tool that will help us to address some of the gender imbalances and inequalities as we provide and design social protection programs. Economic stability. We have talked about social protection helping to replace income. In that sense, it prevents extreme poverty among our people, which will lead to economic stability. We all know that the products that we produce will need people who will buy them. So social protection will actually stimulate aggregate demand, which in the end will also stabilize our economies. So it's a very important value to the economy at large. There are many the benefits that we derive from the provision of social protection. So I believe we really need to invest in it. Improving labor market participation. What this simply means is that our people have been educated. They know that the basics have been covered. Their participation in the labor market is higher. Their healthcare has been taken care of. It means they become more productive. So is the value of social protection to our economies, to the continent. Compensation. Our people, ourselves, can be injured at the workplace, be it on the roads or wherever, and you become disabled. You need to access medical services, which can be very expensive if you were to meet it out of pocket. So, social protection will provide compensation for the impairment, for the disabilities, should somebody be injured. Poverty reduction. There is no economic development that we can talk about if our people are poor. Like I have said, the products that we want to produce will need a market. So, social protection helps to eradicate, reduce poverty. We will talk about some of the targets in SDGs of eradicating poverty, which I know the Honorable Minister in his speeches also touched on. So we can achieve this through social protection. Social cohesion and stability. Social protection contributes to social cohesion and stability by reducing inequality, addressing social tension. Where there is high inequality and the people are poor, I think nobody will rest. Even those who may be rich or who are rich will also not rest, because crime rate will increase because of tension and all these kind of things. So social protection is an equalizer. It will reduce the inequalities as we redistribute resources. Restoring dignity. Our social protection restores the dignity and empowerment of citizens by ensuring that everybody can enjoy the basics or the basic necessities. Social transformation and equity. We are talking of transforming even the digital, we are talking about transforming our societies, inclusive participation, to make sure that everybody else has got a chance to participate in the mainstream economy. We are working on it together. Social protection, by providing to our people, helps in transforming the economy as we address inequalities and injustices. Inclusive growth, inclusivity. This has also been talked about. I heard it coming out. It ensures that all the benefits that we pay, the social transfers we provide to our citizens will enable them to also participate in the mainstream economy. They become banked as well. So we achieve inclusive growth, leaving no place and no one behind, as is our target in terms of the SDGs. So I believe that with this, I probably have convinced you that we have got a lot to benefit by providing or in providing social protection to our citizens. But let me say, the ultimate goal of providing social protection is to end poverty. We will have economic prosperity if we end poverty. That's the target, the main challenge for the continent. We want to end poverty in the continent. So we want to make sure that we provide social protection. I took a quote from one of our own, the iconic late former president of South Africa. I'm sure most of us know this gentleman, the late Nelson Mandela, where he said, overcoming poverty is not a gesture of charity. If that is what our governments and our people think when they provide social protection, it's not a gesture of charity. It is an act of justice. It is the protection of a fundamental human right. We have just talked about social protection as a human right, the right to dignity and a decent life. So when we are providing social protection, ladies and gentlemen, to our citizens, we are not doing them a favor. We are discharging our obligation. That's what we should be doing. Now, let's try to talk about universality. We have all appreciated social protection as a human right, and I believe to some extent, I have convinced others that if we don't invest in social protection, we have everything to lose as a continent, as our nations. It is universality. We are trying to also, again, appreciate and understand universality. So according to the World Bank and the ILO, they agree that universal social protection refers to the integrated set of policies designed to ensure income security and support to all the people across the life cycle. We have talked about those 9 risks, 9 contingencies of life. We are taking people from cradle to grave. Paying particular attention to the poor and the vulnerable. So you can see the ultimate goal, as was said by Nelson Mandela, is to eradicate poverty. Anyone in our continent who needs social protection should be able to access it. So the key aspects of universal social protection will include covering all the people. We should leave no place and no one behind. That's universality. No exclusions. We should fight to make sure that the design of our programs, the laws that provide pensions and insurance should be designed in such a way that they don't exclude other people who should also benefit and participate. Okay. So, looking at universality, we have got a target that we are chasing, SDGs, where we want to end poverty by 2030. So we are simply saying in this slide, our social protection, if it is not provided, it will be very difficult for the continent to achieve the SDGs. The majority of the SDGs are realized through the provision of social protection. But one key one, SDG 1, is on ending poverty. I believe that if we manage to end poverty, we'll have economic prosperity. Because everybody will be participating. We'll have inclusivity. And let me also hasten to mention that including or achieving the SDG will be very difficult and impossible for the continent if the informal economy, whom we will talk about here as the missing middle, are not covered by social protection. You will see why. So what are we saying? The right to social protection is enshrined in the constitutions of several countries. And in Africa, I could mention South Africa, and Kenya. And the call here is to say our nations are all encouraged to align to international conventions, protocols, and recommendations on social protection, particularly trying to make social protection a constitutional right. Okay. Why is universal social protection of concern to Africa? I want us to pay attention to these figures. Some of them have already been mentioned. Here we are giving percentage of our population in the continent and in some of our sub-regions who are covered by at least one social protection benefit. And to give you a picture on where we stand as a continent. So in the world, 46.9% of the population is covered by at least one social protection benefit. And what are we seeing in Africa? In our continent, Africa, only 17.4% of the population is covered by at least one social security benefit. We are talking about one. It's not even adequate or comprehensive. It is too low. We really have a mammoth task. We have a huge task as regulators, as policymakers, to say, what is it that we need to do to make sure that we accelerate coverage? North Africa, 33.8%. But yes, these figures will also help our African Union and our leaders in Africa to say, where do we need to focus attention? In terms of the sub-regions, we have a problem in sub-Saharan. As you can see, only 13.7% of the population is covered by at least one social security benefit. And we are saying social protection is a human right. And this is where we stand. So, from this perspective, it means we really need to do something to work on making sure that we accelerate and expand coverage to make sure that our people are covered by social protection. That's the gap that we have in terms of coverage. Now, we have also seen that the problem is exacerbated by informalization, which is huge in Africa. I've already talked about the number of people who are covered by at least one social security benefit. I will not look at that. But in terms of globally, 27% of the population has adequate social security coverage. Here we are now talking about social insurance, excluding the non-contributory programs. But just touching on one of our regions in Africa, in terms of ILO data, only 10% of the economically active in sub-Saharan Africa is covered by statutory social security schemes, which means a huge number of our people are not covered by social security. And we have all agreed that if we want to eradicate, reduce poverty, our people should be covered by social protection. But we have such a huge gap. To give you more insights in terms of informalization, our people who are in the informal economy or who are in informal jobs, we have 86% in Africa who are in informal economy. Let's compare this to what is in other regions and also in the world. Globally, 61% of the population is in the informal economy. And in the Americas, 40% is in the informal economy. Asia and the Pacific, 68% are in the informal economy. And in Europe, 25% are in the informal economy. But our Africa, the continent, we have 86% of our active population in the informal economy. So you can see that even the world 61% was actually pulled up by our huge number of people who are in the informal economy. So without us doing something in terms of extending coverage to our people in the informal sector or informal economy, it means we will not be able to achieve the SDGs. and it will be difficult for the continent to eradicate poverty. The worst thing is that this group called the missing middle, the informal economy, is our missing middle. What we are saying when we say the missing middle, these people are not poor enough to be covered by social assistance that is provided from taxes, the non-contributor programs. They are regarded as not poor enough. So they don't qualify. They don't meet the eligibility criteria to be provided with social assistance. So they are excluded. The other hand, they also don't have the capacity and with incomes to participate in the programs. The programs we are talking about here as regulators, which we have designed, which were designed for those who are in the formal economy. The people in the informal sector have little income, have no capacity to participate in those. So what happens? Can you move the slide, please? Further again. Thank you. So what happens is that these people are left. They can't receive social assistance. At the same time, they don't have social security benefits, social insurance benefits, pension benefits, because they can't participate in those because of the design of our programs. So they are in the missing middle. And they are a huge population. We have talked about 86% of them in this sector. So you can see the task that we have as a continent to make sure that we do something very quickly if we are to meet or to attain the targets of the SDGs. The worst thing is that the shocks, such as pandemics, like the COVID-19, it hit the people in the informal sector the most. We have seen it with COVID. I'm told that my time is not much. Now, I had prepared a presentation for an hour, but anyway, we have to, everything have changed, so I will need to also adapt. So maybe some of the things that have been said, I will just skip. I will rush more to the things that I think will be relevant for our resolutions here and coming up with some strategies going forward. So I have already talked about the missing middle, the people in the informal sector. We need to cover them. Some of the causes of low coverage, I will not talk much in terms of trying to explain them. Some of them are self-explanatory. Lack of a rights-based approach to provision of social protection, underfunding of social protection systems. That is also why we have Strategy 2025. Decent work deficits in some of the areas like the migrants, the informal sector. Weak governance and administration systems, you will agree with me, we'll talk about it. We see those in the continent, in some of our countries, weak governance, absence of policy and institutional coordination. There was also mention of the issue of the fragmentation in the way we are doing our business and providing social security, social insurance. There's need for that coordination. And our people in the rural areas in Africa and also in fragile zones are not covered by social protection. So these are some of the reasons why we have low coverage in the continent or on the continent. So to address the challenges that we have just talked about, the Regional Social Protection Strategy 2021-25 was established, and its target is to attain 40% coverage. From the 17% that we mentioned, which is currently the number of people that we are covering, we want to reach 40% coverage. And this will help us to attain SDGs, and we want to accelerate that. What are the targets of the strategy? The strategy 2021-2025 has got these targets, ladies and gentlemen, and this is what we have to think around. We have acknowledged that the quality of public services that we provide the citizens is not the quality that we would want. So the strategy has got the target to achieve good quality and universal public services, to create greater trust in our governments, stronger social contract between the governments and the citizens, greater willingness to pay taxes. So our people see benefit in terms of good social services, they will willingly pay taxes. So we need to address the issue of social protection and social services that we provide. And also higher government revenues. That's what we want to achieve. To increase the cake, to improve the fiscus, so that we can provide social protection to our people. Allow me not to talk much about the need to provide social protection, because I'm simply talking here about what the strategy appreciates as key and relevant. The fact that we want to should provide decent living to our people. We should acknowledge social protection as having to be inclusive and to achieve social justice. I will not talk much on this one. Let me talk about the action areas of strategy 2025, 2021, 2025. It has got 3 action areas. The first one, it aims to enhance coverage and adequacy of benefits through strong social protection strategies, which we need to come up with as this house. Legal frameworks. We are the regulators. The challenge is to say we need to come up with legal frameworks that will accelerate coverage and also the programs. That's action item 1. Action area 2, we need to close the financing gaps. One of the reasons why we have low coverage, governments will tell you that the fiscal space is small and they cannot provide some of the social protection benefits and programs that could be provided to the citizens. So the strategy aims to close the gap and ensure sustainability in terms of our funding for social protection. And somebody talked about partnerships. The strategy aims to leverage on partnerships at the national level, regionally, and internationally, in terms of providing funding, technical assistance on provision of social protection. That's what the strategy aims to do. So we have seen some commitments in Africa. We have seen other African countries already have universal old age pension schemes. I've mentioned quite a few there: Botswana, Namibia, Lesotho, and Mauritius. And there are some studies that are ongoing in Zimbabwe to try and also introduce a universal social protection program for the old age. We have seen the Abidjan Declaration, where our governments have committed to progressively extend sustainable social protection. The Ouagadougou Declaration and Plan of Action, I will not explain it. I'm just unpacking some of the commitments that we see in Africa to show that there is really that commitment to get there. And there are several declarations and commitments. And I can share with you that Liberia, followed by South Africa and Mauritius, spent largest proportion of social protection programs with a fiscal outlay around double that of the American system. It's a commitment that is there in Africa. So there's something that other African countries in the continent can learn from. We have seen some emerging good practices in extending coverage. I will not talk about this. I want to rush quickly to the recommendations that I want to make. I had given some examples there of what is happening in other countries in Africa that have done commendably well, or who have really made some effort in extending coverage. I can mention Rwanda. They have a pension scheme for the informal sector, as well as their national health insurance scheme. It's working very well there. There is some lessons to learn. I can also talk about Cote d'Ivoire. I will not go into the details of what they have done in the interest of time, but these are some of the examples we can learn from Africa that I've looked at. Egypt also has really done some effort in extending coverage to the people in the informal economy, the missing middle, to make sure that we bring them on board in terms of providing social protection. And Ghana has also done a lot, particularly by using special taxes. Others would call them sin taxes, to extend coverage to the informal economy. And also outside Africa, I can talk about Brazil. And Brazil used a model that is similar to that of Rwanda, which means to say we are in the right track as well. And I can also mention one country that has done well in extending coverage by simplifying collection method using technology that we have just talked about as well here to bring on board the informal sector. We can look at the slides later. That is for Uruguay there. But allow me to, these are my last slides and I won't take much time. Recommendations or recommended actions and reform options. These are some of the things that we can do. We have seen fragmentation that has been mentioned in provision of social security. So there's need for a systematic approach to social protection provision. We have talked about good governance. We need to deal with the issues of good governance to address confidence challenges. That's one of the challenges we have, and our people will not want to participate in social protection programs because they don't have the confidence in the public administration. We need to build on social dialogue with social partners, investment in data collection and analysis for evidence-based policy decisions. We need to do this. Monitoring and evaluation arrangement at continent level to track progress. We have seen the declarations made, but is there a monitoring and evaluation program to see if the countries are making progress? So if this can be put in place and there's really a monitoring mechanism, design of shock responsive social protection systems to be able to respond to shocks quickly. And somebody has said we don't want to continue relying on donations and support from other regions outside the African continent. I can mention that the European Union has got a program that it supports countries, low income and middle income countries, in providing social protection. But we are saying our African Union at continent level, we can also come up with such a fund and be able to support our countries as a continent without relying from outside, because this is not sustainable. We need to emphasize on empowerment programs and livelihoods so that we don't feed our people with the fish for life, but rather we teach them to fish on their own. So livelihoods and empowerment is an area that we need to look at. We are also advised to leverage on our vast natural resources as a country. Somebody mentioned this. We can have our sovereign wealth funds at continent level, at country level, to provide sustainable funding for social protection. And yes, bilateral and multilateral and regional agreements will be required to ensure portability of social protection benefits. Right now, if somebody works in one of the African countries, when they leave and go to their home country, they may not be able to move with their social protection. M&E framework to track regional progress, I've mentioned this. The last 3 points I just want to mention here, we need to have a good balance between contributory and non-contributory provision of social protection with a bias towards contributory. It's more sustainable. And we also need our national constitutions to advance a social protection agenda that gives effect to the rights and entitlements to the citizens on social protection. So a human rights approach to social protection will require our countries to really have a consensus on what constitutes socially acceptable minimum package below which no one should fall. When we have done that, we are now able to know the minimums that we should provide to our people. These are some of the few action recommendations and reforms that I thought of coming up with. Thank you.
Thank you very much for that presentation, sir. I don't get any questions.
Really?
And there you go, questions. I see a hand at the back. That being said as well, I think I was corrected. We are giving tokens to our speakers. So Dr. Anselm, please come so you can receive your token as well. And whilst you have the floor, We'll also do that. Questions, there's a hand at the back. Please just lift your hand. We've got microphones, roving microphones coming, that are coming there. You can ask as you come, sir. Thank you. What percent of the finance? Since it's extremely ambitious, it's realistic. Number two, we as Africans, we have different ways of addressing the problems. When there is there a build, when someone sees and can't come to help their lives. Is it not the time to redefine social protection benefit in the context of life, function, and bring this in the ambit of the form of social protection? Maybe this may improve the coverage of the time process.
Do we take more? I answer this.
Well, he's asking you.
Okay, I was asking if I can take more questions or I can answer these two.
Three questions. Answer them once. Okay, we got three.
Thank you very much.
Don't you guys like have a speakers WhatsApp? You can ask each other these questions.
Well, it's coming from the dog. Maybe for the benefit of the house. So 40%, 2021 to 2025. To be honest, my honest view is that it's a bit of ambitious in my own view. Why am I saying that? I have looked at the gap that is there, which I try to unpack. If you look at our people in the informal sector, where we are saying all of them are not covered by social security, we have 86% of our population in the informal economy. And we are also saying we are trying to move from a 17.4% to a whopping 40% in how many years? Maybe just a few years remaining. I think it's a bit of ambitious, but we may try to accelerate. That's my honest view. So it takes all of us to then come up with those programs, those policies, and all the like that will accelerate coverage or expand coverage. Then coming to the traditional way of providing social security, which we've always done, in Zimbabwe, I can tell you that people have got the funeral arrangement as groups. Others can have a small group where they put in money and give to the next person after so many months and so on. Yes, it works. We are taking the example, it's only that I did not talk about Rwanda. If you look at Rwanda, how they've managed to achieve the huge coverage on national health insurance scheme, it started as community-based programs, and they were brought into the mainstream program, or the more coordinated, the formal program, from their community-based. So yes, we need to come up with that mechanism of trying to integrate them, bring them on board, and they become of the major system or the main system. It will help us to extend coverage. Already it has happened in Rwanda, and I believe we can do it in many of our African countries in the continent.
Okay, thank you very much. Let's give a big round of applause. Thank you. The beauty of being a professional MC, I do different fields. I didn't know what you guys are talking about, but you were right. You were wrong. All right. So would we do something quick? Go, Dr. Please come and receive something. Please come back, sir. Chef, please come back. We'd like to give you something. My apologies for cutting you short. We'd like to bring a panel discussion just before lunch, and then we can have a free lunch. Sorry, free afternoon instead of going for lunch and then coming back. Let's just see this through. Okay. So you want to come right here? Since you're wearing right inch heels, the stairs and some, just right here. There we go. Okay, our photographer, please wait for our photographer. Right there. Just stand by the side. All right, next speaker, ladies and gentlemen. There we go. Start the pictures. Okay, thank you. Now I would like to hand over the rest of the time to my co-MC Alice. Let's give a big round of applause, ladies and gentlemen. Let's give a big round of applause. Oh, you can do better, guys. You can do better. Thank you.
Thank you, Maimba, and let's give him a round of applause for the good work done during the morning. And Maimba, this is not really a favor. It's so that, you make people clap for me the next time. Anyway, we are now moving on into the next session. For those who don't know me, my name is Alice Shumba. I'm with FBC, and I'm in the insurance industry as well, so I can understand what the speakers are saying. Okay, so we are now entering into that session where we are competing with the stomach, and we'll try as much as we can to speed things up. I'll be your co-MC today and tomorrow, so you'll be seeing myself and Maimba and Dr. Ansemi interchanging now and again. We are now moving into the section where we are going to try and have a lively discussion, and we are going to have a panel discussion. So I'm going to call upon Mr. Mr. Sostenes Kewe. I think you have seen him. You can come to the podium, and I'll call upon other members of the panel to come through as well. We've got Mr. Sande Thomas. He's also part of the panel discussion. Dilme Dramas Niozeni from Rwanda. We have heard a lot about Rwanda, and we hope you are going to have insurance lessons from the other markets. Then Mr. Muyangi from TIRA, Tanzania Insurance Regulatory Authority. If we can all have you up front so that we can commence the panel discussion. Mr. Kewe may then introduce the other members of the panel, but we have seen him before. Nobody has quite introduced him for who he is. He is the director, he's the executive chairperson of Africa College of Insurance and Social Protection, and serves as secretary to the advisory board of the ACSIP. If I want to start talking about Mr. Kewe's experience and his qualification, it fills a whole page. So I'll just tell you, he's got United Nations of certificates on him, qualifications from Cape Town, United States. I see even we do have Scotland, Italy. So you've got to go through his profile. He's such a learned guy, and he's going to lead the panel discussion. Over to you, Mr. Kewe.
Alice, thank you so much, Alice, for this nice introduction. Our session is a learning session. So it's actually a listening one from other markets. We know we are in Zimbabwe. We have heard, we will hear more. Since we are talking about the continent, then we selected at least 3 markets for this plenary session to hear from them. So I'm privileged to have 3 members who will help us unpack some of the critical areas that we think, the rest of the continent can learn, or at least the delegates in this room can learn. In terms of introducing the panelists, you have heard Mr. Sande is here, the Commissioner of Insurance for Nigeria, also the President of OAISA. I have Dilme here, who is from Central Bank of Rwanda. We have Mr. Muyengi from Tanzania Insurance Regulatory Authority. The profiles are written in the program, particularly for Mr. Sande. We have like 45 minutes or less to do this job. And I would like to build some context, particularly because of what we have heard from the Honorable Minister. I thought that the speech was very intriguing, quite, gave us some thoughts, or gives us some thoughts in terms of thinking about the future. And as well as the presentation from Dr. Anselmi, the digitization of value chains and the social security coverage, the vision for the continent, at least by 2025, which is very near. We can push it to 2030 or more. But going back to the theme of our retreat, which is innovation for smart insurance and social protection for our continent, I'll be moderating this, and I have Nigeria, which is a market of more than 200 million people. So he will say more about that. Rwanda, which is around 13 million people. Tanzania, 63. So I can imagine looking at the penetration of insurance and social protection, looking at the aspirations of people we have in our continent, businesses, informality, vulnerabilities that are real. And we don't have to go to the moon to look for these risks because we experience them. We pay a price for either having a cover not being fulfilled or for not having a cover at all. Now, what I wanted to do, I'll give each one 3 minutes. Just tell us about what is driving the growth of insurance in Nigeria, of insurance, social protection in Rwanda, of insurance in Tanzania. And the interest is, what is this that is working, that they are happy with, that us all here can learn from, we can pick, we can copy, and tweak for our market to work in our markets. It could be partnerships, it could be support that has worked for these markets. Remember that these are regulators, so we have a regulatory lens in the conversation, but from the enabling market perspective, we want them to share with us here. So to begin, I would like to start with my left here, Mr. Sande. Would you share with us, with the audience, what is really working in Nigeria that you would like to share with the audience, and how is it actually working for you? And the next one would be, is that all? What are the greatest concerns? What mistakes that they should not repeat because you have already learned from it? Over to you.
Thank you, the moderator. I think I will want ladies here to pardon the moderator. He is responsible for what we are seeing here without the representation. I had a warning yesterday. So if I were the one that should have made this picking, probably I would have done it differently. He was not there, so he was not warned. Now we have this just full of men. Now to your question. Of course, you will know that Nigeria has a population of over 200 million. And one thing that we usually say is that the population is not for nothing. Again, is the biggest economy in Africa. So the driver of the insurance sector in Nigeria largely is having to innovate in a manner that will meet the needs of this population. And of course, that can best be done, which is what we're doing, deploying technology. We started with ourselves, the regulator. The supply side has to be activated to be able to satisfy the demand that is going to come from creativity and innovation. Because innovation is useless if there is no meeting of the minds of both the supply and the demand side. So in all our workings, we were looking at both the supply side and also the demand side. The supply side means the operators, and this requires authorization, that is licensing, ensuring that they comply with rules, ensuring that there are backups when innovations are made. We give necessary supports. Today, If you are an intermediary in Nigeria, you don't have to visit the regulatory body to get license. From the comfort of your office, you can upload all your papers and your license will drop on your system. You don't have to make any physical contact with the organization. That is looking at the supply side. Of course, creating the needed awareness is also one of the areas that we are looking at. Yes, we've started, but we still have a lot of grounds to cover in the market. It's quite a big market. And also, of course, you know that awareness creation is not cheap. It is quite demanding on our wallet. So this is another area. But largely, I will say that creating that products that address the structure of the pyramid from the peak to the base will definitely make a difference and will impact on the economy and will be able to probably improve the well-being of the people. I think I will stop at this point for now.
Thank you so much. In terms of the concerns, I would like you to just give us a little bit more. What is, giving you a hard time on the insurance penetration in Nigeria?
Yeah, we tell you it's not unique. Exception of the insurance as a sector, we are still struggling with that. People really don't understand the benefits that that insurance delivers. And because of that, it's misconstrued. There is a sector, a group that we see it as meant for the those who are already there, the well-fed individuals. But there are those also who will feel that what I cannot see, I cannot begin to provide for it. Unlike in the banking sector, you know that if you put your money in the banking sector, any day you want it, you can go there and demand from the counter. It's not exactly the same in insurance. And of course, to worsen these situations is the fact that even the supply side, I believe, in my own thinking, that we are still not doing enough to be able to let the people know the quality of how we can impact on their well-being. I think this is critical. It's a big challenge for us, but we are confronting it with intense and enhanced public awareness.
Thank you. Let me shift the markets, then move to Rwanda.
Yeah, thank you very much, moderator. Maybe before I speak on this important topic, it is important that maybe I give just a little background on what we do at the National Bank of Rwanda. Yeah, National Bank of Rwanda is a consolidated supervisor, supervising banking, microfinance, insurance, pension, and the other non-depository financial services. So now you can understand the big mandate that central bank has. In addition to the prices and the financial stability, we're also in charge of financial sector development and inclusion, as well as consumer protection and market conduct issues. So in terms of our legal framework, our legal framework is a dynamic one and is a principle-based tending to a risk-based approach. For us, we allow this kind of innovation and changing environment. We are aware that the world is changing. We need to have the legal and regulatory framework that is accommodative to these changes that we are seeing across the globe. Thank you. When I'm talking about the insurance sector and pension sector in Rwanda, maybe what I can say is that I have seen that this sector has been driven by, first of all, the strong government policies encouraging the social protection, especially in terms of pension and in terms of health insurance. This is where I'm going now to dwell my my speech on. Maybe if I can give a little maybe experience about the health insurance coverage. Currently in Rwanda, we have a universal health insurance scheme. currently it covers 11 million out of 13 million, so which is about 86% of the total population. How it is structured is that we start from the villages, then cascading to the sectors and districts. And in terms of contributions, these contributions paid by the population is done through mobile payment. You can use your mobile phone and you pay your contribution. And in addition to those contributions by the contributors, the government also has put some of the subsidies as source of funds as determined by the Prime Minister order to sustain that fund to make sure that it cover all the benefit of the contributors. So it is a very good scheme. It is operating very well. It is, I can say that it is currently sustainable because it has enough funds and resources to cater for the population. When I cross over to the pension side, we have also what we call universal pension scheme, which is long-term social scheme, which is called the Ezoheza. And this scheme is there just to encourage people working in the informal sector to save for their retirement. We believe that any person needs better life or better health for when he's retiring or she's retiring. That's why the government has put in place this universal pension scheme, and under that universal pension scheme, the government is coming up with what we call subsidies. So you contribute, and on class one, you contribute up to 15,100 franc, and you get 100% subsidy from the government. And if you contribute under cluster 2 or contributing 18,100 franc, then you are eligible to 50% of government subsidies. And in addition to that, the government has also put a kind of incentives in terms of life insurance where contributors, if you hit that threshold set by the government, either 15 or 18,000, then you are entitled to a life insurance, which is especially for funeral insurance and death and permanent disability insurance cover up to a million one franc. So those incentives are really helping. Now we are seeing that currently the scheme has been there since 2018. Now currently it has contributors around above 3 million Rwandan. So which is now it's growing very significantly. We've seen that since June 2022 up to June 2023, the scheme has been growing in terms of contributors up to 39%. Which is a very good growth when we compare to the kind of these schemes. And how now this scheme is working in terms of effectiveness. If, for instance, this is about the governance of that scheme. Now the scheme is managed by Rwanda Social Security Board, but at each district and every sector and every cell, you find people like working like ambassadors, like trying to mobilize population to join the scheme. And in terms of course, the contribution is not so much because you can use your mobile phone to contribute until you reach this 15,000 that we are talking about. You can just start by contributing 500 and up to that threshold if you want to benefit from the government incentives. Maybe we have so many innovation that we can share with the audience, but for the interest of time, I wanted to dwell on this consumer protection innovation space, where now currently central bank has put in place what we call a web comparator, and this is a web or a mobile phone platform developed by the central bank to ensure transparency and fair pricing of financial products and services within the financial sector, and it helps financial services consumers to compare financial products and financial and services from different financial service providers. For instance, if you want to join a bank A or a bank B, then you can use this web comparator to compare their services and their prices. Then you are able to know exactly where you can go. And in terms of again, there is also, in terms of complaints handling, central bank also developed a web platform called the Inuma Chat Box, and this is also in charge of it's like a complaints management and engagement customer service, where the consumer of financial service products and services can lodge a complaint through that platform, and that complaints goes immediately to the financial institutions. Then if a financial institution cannot respond within 15 days, then the consumer has the right to escalate to the central bank. And when the consumer is lodging a complaint to the FSPs, then automatically central bank get a kind of alert, so that we can be able to follow, and this has reduced the kind of complaints that we have seen in FSPs. Thank you, moderator.
Thank you. Let's move on to. Very good. I'll come back. I have a few more questions on what kind of innovations are you thinking for the future. But let me move to Tanzania. Muyengi.
Thank you. As I introduced, my name is Zakaria Muyengi from Tanzania Insurance Regulatory Authority. First of all, I would like to introduce my authority. Tanzania Insurance Regulatory Authority was established in 2009 under Act number 10 with several mandates, such as register insurance companies, supervising companies, set code of conduct in transacting business, also to advise the government on insurance issues, particularly for developing of the sector. So we are talking about the population of Tanzania of about 60 million people. And according to the statistics we have in Tanzania, only about 36% of the people are using insurance. No, not using, are aware with insurance. And the usage is low. Recently, the Finscope conducted the survey and come up with the results of only 10 to 15% are using the insurance. So when you talk about 16 people and we have such kind of the statistics of low usage of insurance, we have first to be creative so that to reach those 60 millions, also to be innovative. Now, for sake of the time, I have to share with you some of the what we are doing in the Tanzania insurance market as far as insurance is concerned. First, recently, last year, the authority, in collaboration with the stakeholder, we introduced what's called the IDPs. That is the insurance digital platform guidelines, and also aiming to reach the population through digital platforms such as mobile. Also, we introduced lesson to introduce the what so-called the ORS. ORS is online registration system, to be easy to access and also to use anywhere you are in the world. You can register your company, and then you use it. You get the license for trading. Another notable achievement, we have so-called the TIRAMIS. This is a TIRA management information system. Now, this is nowadays in Tanzania, you don't need to go for paper to get covenant, insurance covenant with the paper. We are stickerless. Okay, so you use the mobile or the system to get your covenant. So these are some of the notable achievement and the development in line with the innovation and issue of digitizing the insurance to Tanzania. Thank you.
Yeah, thank you. I wanted to know more about the IDP. Which type of partners are you working with since you're introducing a digital platform? Are they, fintechs, telecoms, which are those?
Yes. Mostly currently we have already registered some of the fintechs and the telecoms. For example, we have some companies in Tanzania like mobile, like Vodacom. So we have the Voda Bima. Through the platform of using the telephone and the company of Vodacom, then you can access information. Also, we have other fintechs nowadays. Youth using the technology, they can register and proceed. I think we have about 3 fintechs and 3 mobile companies.
Thank you very much. I think we have heard from what's going on. I wanted to push this to the next level in terms of, so all these initiatives, all these efforts, so what? And given the theme of our retreat in terms of innovations, let me turn back to Mr. Sunday. So what do you think are the real typical problems that are great opportunities for innovation right now, in terms of providing the solutions that are needed? Now, from the regulatory perspective, I want you to be selfish enough, given your KPIs as a regulator. How is innovation going to help you achieve your own KPIs? And the next level would be, if you have the strategy for the industry, how is innovation going to really deliver the KPIs for the industry? Thank you.
Well, I think we almost agree with the fact that insurance is a knowledge-based sector. So the first place to start is capacity building. There must be an understanding of what is the expectation. The level of knowledge that we have right now, we need to be enhanced for us to drive that destination that we are looking at. There must be so much in the area of capacity building, and I think that is where the African College of Insurance will come in. We need to learn new things. We need to deviate from the old and begin to see how we can progress to understanding the market that we are supposed to service. When I mean market now, for the regulator, the market is the operator, essentially, and for the operator, the market is the public. So we must begin to have a clear understanding of this. Of course, when we have developed sufficient capacity to innovate, I think innovation is embedded in every one of us. All we need to do is to understand exactly how to deploy what we have within us. There's no reinventing the wheels. When you have learned sufficiently what are the needs, what are the demands, what are those things that are going to add value to the public, to begin to put together a product that will satisfy these needs is not going to be too difficult. Again, we all have come to terms with the fact that we are in the age of technology that have kept improving by the day. This we need to explore to the max. To be able to deliver on innovation. But most critical is the fact that confidence building. We must build the confidence of the general public in the insurance sector. Without that, you might innovate what you want, whatever you want to innovate. You might deploy technology the way you want to deploy it. If the confidence is not there that the endpoint is going to meet my needs, you have just wasted time and resources. Therefore, it is important for us to build that confidence in the minds of the general public. The regulator that we are must also must be liberal. Let the operators, let them flow freely. And that is where sandbox comes in. The sandbox thing, it's something that we must begin to build on. It's going to allow them to probably fail within a confine. And from there, I'm sure they will get it right and be able to move from there. I think all these will help in taking us to the desired destination.
Thank you very much. I would like to, get some more insights from Rwanda. You have given us a very good, experience in terms of how you are taking care of the low-income people, rural people, with the entire ecosystem very well organized. So I would like to you to share with us, how are you ensuring that consumers, those low-income earners, those farmers who may not necessarily have the tech-savvy kind of experience being taken care of? So I'm pushing the issue of consumer protection here.
Yeah, thank you very much, moderator, on that very, very important and good question. First of all, I'd like to inform the audience that the central bank has put in place a law on on consumer protection and market conduct. And through that law, we also developed implementing regulations, and this to ensure that these financial service providers are giving proper services and adequate services to their consumers or their clients. And in case there is one of the financial institution which is not really behaving in line with the financial consumer protection law and implementing regulations, of course, we have some more enforcement action that we apply. Maybe, moderator, if you can allow me to go back to the first question that you're talking about, then all these initiatives, so what? So maybe I wanted to say that to me, the best way to predict the future is to create it. This is what I can say. If we are here in this room and we are talking about the future of insurance sector of Africa, then we need to drive strategies and best way to predict the future. And the best way to predict the future is to create it. How do we create it then? So to me, the best way to create it is, first of all, to have this changing mindset of embracing innovation and technology. As you see from the presentation, you see that in 2030, Africa will have a population of around 4.4 billion. And most of the demographics tells me that we will have more youth. than the older people. Then how can we make sure that we are creating values for this young generation? I think it's a challenge for us as regulators and as well as the market to ensure that we are bringing good products that are tailor-made to those young generation. So of recent, we have been seeing millennials. Now we are talking about Generation Z, and we are talking about also Generation Alpha. Also, how can we take on board and develop products that will cater for these young generation that are emerging? So I think when we talk about innovation, I think we need really to make sure that we innovate in terms of product and services so as to cater for this evolving market that we are seeing in the near future. Thank you.
Thank you very much. I would like to go back to Tanzania, and you have mentioned quite intriguing developments, and that's why I went back to the partnerships with telecoms, with fintechs. So I'd like you to help us and share with the audience here, what is the source of all this confidence that you can allow these alternative ways to come and disrupt the insurance industry? Are you guided by any policy, any strategy within the regulatory authority or financial sector or anywhere? I just want to be informed of this confidence. This is Tanzania now.
Yeah, the confidence. 2020, the government of Tanzania and Ministry of Finance, where the Tanzania Insurance Regulatory or the insurance sector is a part of, they developed and launched what so-called the Financial Sector Development Master Plan 2030. That is the 10 years plan, which guided what should be done at what time by the sector. So within the Financial Sector Development Master Plan, there is a KPI set for the insurance. And one of the part is just to increase awareness from, as I said, from 36% to 8% by 2030. And also the usage from about 10 to 15% to 50% by 2030. Now, to achieve such kind of KPI, as I said, you need several initiatives, including, of course, changing of mindset, as my fellow from Rwanda said, also embracing the technology, the issue of innovation, and you should create the conducive environment to other stakeholders to come in and use the technology they have and innovation to help to go to that kind of KPI which set. Now, as I said, we started to make the availability of insurance service to be easy and accessible easily through those, as I said, the IDPs and ORS and having the tiramis and such kind of. So to answer your question, we have such kind of the plan in place.
Thank you very much. I'm going to the last run of my key themes that I wanted to drive for this plenary. And I want all the regulators, with me here to think about the implications of continental free trade area. And if not, then think of any other market driver, which is youth or women, food security, agriculture. We have heard of informality, social protection. We have just listened to our presenter here on the vision for social protection. So think of any of these. And what I want you to do is to help us. It is believed that regulators are at the center of transforming these markets. because of the mandate that they have. Now, Africa believes that the intra-African trade can give us the benefits of GDP growth of around 6%. If we want to ensure 1.4 billion people are resilient, then there's a response needed from insurance and social protection. If we all want to have all our stomachs fed, 1.4 billion people, and any other number by 2030, 50, we have to ensure we are food self-sufficient. The role of insurance and social protection in all fronts, whether it's from the risk protection or building the confidence and aspirations, as well as protecting our wealth. What should the regulators start doing now or tomorrow to enable these changes to come to reality? What should they start doing now? So each one, whoever is ready, you can pick any perspective and then share with us. What do you think should regulators start doing now, and more so differently? And if possible, without any box, right? So who wants to go first? All right.
Since you are used to calling me first. Yeah. Thank you, Mr. Moderator. I think what you have just touched stands at the center of the whole essence of ISA. We recognize that AFTA, which is the African Trade Area, is the catalyst that is needed by individual constituent parts of Africa, of Africa's economy, to be able to move to the next level. But we know that for orderliness, there must be rules that governs transactions. So we must begin to look at our rules as regulators, that we create a seamless cross-border transactions. The last speaker said something that touched my heart. Today, if you are from Zimbabwe, like we have some, working in Nigeria, there's adequate provision for your retirement in Nigeria. You want to continue, you want to come back home, like some have done, and you want to continue to operate. Your benefits in Nigeria, is it portable? And we begin to create that atmosphere where portability of benefits across the African continent is enhanced by the rules. And we begin to look at how to seamlessly compete amongst ourselves without necessarily diminishing service delivery to the clientele base. I think that is also quite central. Of course, our individual environment differs, but the service expectation that we have across the continent is virtually the same. Everybody, everywhere in Nigeria and Africa as a whole, they want the best of service. Can't we use the platform of AFTA to deliver on these? In terms of products, is it not possible for us to look across the other side of the field and see the product needs, develop it, package it here, and transport it, and allow the intermediary at the other end to begin to disseminate across the other markets? I believe these initiatives can actually enhance the relationship within the African continent.
Thank you.
Yeah.
Next, please.
Thank you very much, Sustain, for having me. Maybe complementary to what our chairperson also said. I convey to his saying that regulators needed to review their legal and regulatory framework to accommodate this changing environment. We used to have these laws and regulations that are compliance based, like black and white rules. But currently we need to evolve and move from this compliance based to a risk based approach where you can accommodate those changes that we are talking about. That is the first. Number two, I want to emphasize on level of collaboration and cooperation. So we need to iron out this issue of working in silos. How can we join our forces together and see all the initiatives that we have in different economic regions? Then we have an integrated way of doing things. Then in that case, we will be able to grow the cake of the insurance sector. For instance, you can imagine you have different insurance companies in Africa, but how much do you cede to them? You find that a chunk of seeded premium is going to this developed world. But if we can join together, we can consolidate our balance sheet, then we can turn more. So this is the second. Now, number three, I want to emphasize on the issue of this value chain approach, where if we think about development of the sector, we need to have this value chain and its ecosystem coming together. How can we work as regulators, insurance companies or insurance sector, these mobile network operators, these aggregators that we are talking about, the working together to develop this sector? Because I don't think that development of this insurance sector lies on regulators. It will also encompasses all these ecosystem that we are talking about. Maybe we need to see where are the missing links. Then after addressing those missing links, we'll be able to come up with strategies on how to develop this sector going forward. And maybe last but not least is the capacity building. We've seen that we are at a different level of maturity of our markets, and we don't have, for instance, these. If we are talking about innovation, then we'll be needing people, the specialists in data analysis. Do we have these data analysts? So to guide us on how we can take decision based on the granular data that we have assessed. Do we have in our markets actuaries that will guide us on how we can assess the risk and evaluate and determine the premium rates that are affordable to our population? I think all these need further thought so that we really develop this sector going forward. Thank you.
Thank you. Mr. Miangi, what do you think the regulators do?
Yes, just emphasize on the agriculture sector in Tanzania. Agriculture sector can be one of the area to be emphasized and to integrate other insurance stakeholders to come in, and including the government. According to the statistics, I think Dr. Anselm shared this. Agriculture sector in Tanzania, 28 to 30% of the GDP of the country in the minimum of Tanzania is contributed from the agriculture sector, and 70% of the population is engaging into the agriculture sector. However, only less or 1% of the the premium, okay, the total premium, which it's 1.12 trillion Tanzania shilling, only percent are coming from agriculture sector. This is very low and need more strategy and strategy, so that at least according to, as I said, the financial sector development master plan, we have the KPI, and one of the KPI to raise 10% of the total underwriting premium should come from agriculture sector. So you can see we have something to do in terms of of rising the premium from agriculture sector to contribute to the insurance. Now, what strategy are the Tanzania Insurance Regulatory Authority and stakeholder are taking? One, we are at the process of preparing so-called Tanzania Agriculture Insurance Scheme, TAIS. This one will take all together the stakeholder in insurance, including the government. We are saying we need the government to subsidize the each premium which policyholder will take. If it is 100%, then the government should take the portion, maybe 40%, and then the 60. This one, the 60 will be taken by the policyholder. This one can attract the majority, this 70% to come in. Yeah.
Thank you so much. This marks the end of my plenary session. I would like to really commend my panelists for delivering the experiences that we expected. I have, a few areas that I want to emphasize. It appears that in order to drive change, what I've heard from the panelists is data centricity, is working together, is capacity, is driving the innovation DNA. So it appears that we don't have a choice, but just move into the game so that we can deliver that value, which is our responsibility as long as we work in the financial sector, in the insurance industry, as well as the pension sectors. With these few remarks, I thank everybody. Thank you, panelists. I wish you a very enjoyable lunch. Thank you.
I think your round of applause should be much louder than this. Thank you, Mr. Kewe, and your panelists for leading us through this very important discussion. And I hope we have learned a few lessons from what other African countries are doing, especially in the light of the Africa Continental Free Trade Area Agreement. And I think we should take lessons from the fellow African countries. Thank you very much. And this marks the end of our day one program. So I've got a few announcements to make. The first announcement is there has been a slight change to the program. Today is a free evening. Tomorrow again is a free evening. But on the gala dinner, we are going to maintain the African night theme. So those who don't have their African attires, please make sure your costumes are ready for the gala dinner. We don't want people appearing in bomber jackets for the gala dinner. Right? And for tonight, I say it is a free evening for everyone except the regulators and the two MCs. So regulators, don't forget to register by the registration desk so that we can your pickup area can be arranged, and the times you will be advised at the registration desk. The books from Dr. Anselmi, they are on sale, $50 for the 2 copies and $30 if you are getting each copy. So grab a copy before you leave this place. Then also from the transport committee, there is an announcement that delegates staying at N1 and at Cresta Lodge, transport will be available from the hotel lobby at 14:45. So just take note of that announcement. And lunch will be served from the VIP lounge. So delegates, please exit using my right. Those that have not yet obtained tickets by now, the tickets will be available as you exit. And when we leave this room, we are not going to randomly leave. We are going to ask Dr. Grace to lead the VIPs out for lunch. We are using the exit to my right. Otherwise, it's been a lovely morning and you have been very well behaved. Tomorrow we start our program at 9 a.m. sharp. So let's be here by 8:30. We do have regulatory approval to fine you at the door if you come in at 1 minute past 9. So have a lovely day, ladies and gentlemen. See you tomorrow. So for now, let's sit whilst we let Dr. Grace lead our dignitaries out. Thank you. If we've got any iPad